All right, now, so we're back. I believe this is going to be on the 5th video. I'm going to try to get to the end of section 3, if I can, in one video. So that would make this one the last video for the, then you're going to have to get the advanced course that's advanced from this level, okay? So, we begin. Trading rules for this strategy. The following will be a few rules to follow that will always keep you on track to profits. This applies to normal harmonic trades, not to failed harmonic trade strategy. That comes afterwards. I found these rules to be very consistent and enough to grow pretty much any account. A few, of course, will be Forex specific, but other are rules that can be applied to any asset class. I trade crypto with this, major, minor Forex pairs, exotics, indices, and metals. These rules cannot be broken unless stated otherwise. They are so very consistent that if you break them, you expose yourself to an increased risk and open yourself up to huge losses. Half-assing this will cause you to blame the rules instead of blaming yourself for not following it. If you blow up an account, chances are very high you violated one or some of these rules that come out from here on forth from this. Also, trading can be very risky and you risk losing all of your money. Always first apply these rules using a demo account and not a live account, so you can be familiar and comfortable with them and confident enough to pull the trigger and see it till the end. Alerts or harmonic patterns can go one or the other way, up or down. When it is not moving up or down, but consolidation, sideways market, that means the beginning of a major move. The longer it remains in consolidation, the larger the move will be. So be patient and wait for it to crack. When you receive an alert through the app, not the alerts from me, my alert gives you the alert when the move is actually starting to happen and the price is almost on the open line of the chart. Be aware that some pairs or asset classes will take a few days to hit the open. The open is the price at which you will open your trade for the highest probability of limiting your drawdown and increasing your profits. Remember, my alerts are more about immediate action than alerts given by the phone app. The other apps, such as the desktop Harmonic App alerts, are immediate, such as mine are immediate and active. Okay, here we go. Since these alerts can be oftentimes 3 or 4 days ahead of schedule, this tells us one thing about those pairs that delay. They are either pulling back, discussed in the next section, and moving further away from targets, or they can be consolidating. Remember, consolidation, pullback. Okay. Some say that trying to trade the harmonic beyond the stop loss is foolish and risky, but I say the more pullback, the merrier I will be at the target. This is more pips and more opportunities to profit. It is risky, but once you have all the tools in place and risk begins to increase with knowledge, the risk is in you, your ability, not the price itself or the strategy itself. The strategy can be reassessed and made more strict very easily, but it is not easy for a human being to improve their behavior and habits. That takes a lot of work and insight. My goal is to shortcut you to profits, not getting into all of the measurements of patterns and which one uses the 618, which was a 168. That is not going to increase your pips. It will only make you overtrade your account. I used to get into all of that, but we're not going to that on this course. A good one is Harmonic Trading Channel on YouTube, and there are other services online that specialize in basic harmonic pattern trading. We'll be using the indicators that make knowing the levels of measurements null and void, and you will see the pullback before they happen and the move before they do. And that is how I was able to call GBP AUD price levels 9 days in advance, and the date at which it would be at or near it. If you can trade price and not only can you target a price, and not only that, also the day and time at which do you think, I need to know the history and the measurements of the pattern and all the things involved. Nope. I understand they work, and that is all I need to know. If price is on the edge of hitting open, it should end up hitting it fast due to the New York-London session, and sometimes the agents has to overlap in the London. Pretty good. But never place a trade just before major news. Make sure no major news is going ahead at least 24 hours if the trade is 20 pips away from open and you're trying to get in early. Wait until the news is passed. What might happen is it might bounce off of the open price and then not cross it, and you face a huge drawdown or get stopped out. Search for an active pattern that is about to activate, and it must be showing you a clear level and line of strong support. It should look like a wall forming below if a bullish or a long-term pattern is called, and above if a short-term or bearish pattern is called.
Are you a trader? Then you'll love Connect One Forex Signals, a leading signal service dedicated to providing the best trading entries and exits for traders. We have the highest reward to risk ratio in the industry, and our pips gain is as high as 1,200 pips in one trade. You don't need to do anything, just set it and forget it. We'll do all the heavy lifting. We also teach how to trade successfully using what we call the RSAI blueprint strategy. Our strategy is based on harmonics, but we also use them in other ways besides just buying and selling to target. Receive signals, learn new techniques and innovative trading systems to bring you to a new level of training and profitability with Connect One Forex Signals. Sign up for a free trial at connect-1-forex-signals.multiscreensite.com or join our Telegram group at t.me/KOFXS group for group chat.
The candlestick. Once you reach an advanced level of the course, you will no longer need any candles to trade at all. Once you do that, that's a sign that you've graduated this course and are a true master of this craft. Now, the candlestick will have a wall built with a set of wicks, long and short, indicating price rejection. At that point, you can enter a trade. Notice I said can, not should. For starters, always open at the open. The best and fastest way to learn the movements is to make sure you're not watching the profit loss statement, but only watch the pips. Get used to only looking at the amount of pips a price is moving up or down. Get used to seeing the pips. This way, once you use the money, once you use money, that you won't get emotional about the trade. And once you use a larger amount, it won't phase you. Okay, money makes you emotional, so don't do it. Only look at the pips. I say this because we cannot help but be emotional about money, and when money is our focus, you'll find it always gets in the way from you. Getting away from you. Trade for pips only. When you're dealing with large amounts of cash, trust me, looking at the dollar signs will kill your account quick. The main reason I move them, and you will want to remove candlesticks from your screen, is it clutters up the screen and carries a lot of noise that hides the true form of the price movement. I used to just switch to Heikin-Ashi candle, but found it gave too many false signals and the price entries were late. Having late entries kills profit margins. For now, you will need the training wheels, so use the candlesticks. You want to see the candlestick is never crossing above or below resistance, support line, or barrier. I love it when that wall is not always easy to spot, and we'll look at the examples, is built so well on the M30, and I know that I can go in heavy with the large lot size, because then my chances of catching 20 pip pops, like I did in one video where I passed the phase 2 exam, our evaluation, is showing you that live. This was the situation. The 20 pip pop was all I needed. Matter of fact, I took 15 pips. So, and a few times, and it goes up dramatically. Now, in my case, I was shorting it. So I will use Candlestick throughout the presentation. You're going to see it, okay? So, examples of harmonic. Seeing the light. Think of a sharp corner sticking out at the point of an electric current is striking out. It shoots the price, and it wiggles like a bolt of lightning. It can strike downwards, sideways, or upwards. In the case in where we were bearish bat pattern, the name of the pattern is irrelevant to me as long as I know it's either bullish or bearish. I could care less about the name. I know the different characteristics, but this is not a beginner course on harmonics. I only give you the meat and potatoes to get you fed. All the extras are found elsewhere. Now I may do a basic course on harmonics one day. At this point, I don't see that coming. For now, we will only concern ourselves with direction. I will give you 3 examples of direction on a bearish harmonic pattern, and then 3 examples on a bullish pattern. Remember, it always is best to trade harmonics in a flat or weak trending market. Okay. All right, so enough of the paragraphs. We're going to talk about some of these. Now, this one right here, this I call the bearish pattern, the instant bear attack, or just bear attack pattern. Okay. You'll notice right at the tip, we're going to notice the tip. The tip, when the tip is facing this way, that means bearish. When the tip is facing downwards, like let's say this triangle here, facing downwards, that means this way. Okay. So here, this is a bearish bear attack pattern. These are quick. These are a little, how do you say? These are tough to catch because they happen so fast. I mean, by the time you see it, it's like here, you know, it's like midway. And sometimes they'll come midway and do that. And then come back later. When I see this, I'm not too thrilled about it coming back. I don't really take a chance on seeing it come back. The comeback patterns are going to be on the other slide, but see, it comes in here. All right. Then now this whole thing released the price once it got to this point. This is on a monthly chart, but this is just an example. Not a monthly chart. This is a daily. It's a daily chart. So tiny. Looks like it says 1 hour. Is it 1 hour? It is 1 hour. Okay. And look at the bottom. I'm thinking about a different chart. So this is 1 hour, and then you see what happened. Okay. This took about maybe 12 hours to form. So whatever the time it took to form the harmonic pattern is a time frame in which you want to have in your mind its grip, when it's going to let go. Now, if it completes within that time grip, it's possible. It's free from it. Okay. So just keep that in mind. And this is the bearish pattern. I call it bear lock. You see what happened, how it went in here, right? Breaks the stop loss, goes up, decides to come right back, comes back in, stops here again, right? Wiggle, you know, kind of wiggled, kind of didn't know what to do, went up, and then it broke a little bit, so halfway. Then goes back into this zone again. It's like it's having trouble. It's having trouble fulfilling this pattern. The reason why is because it was in an uptrend. This is a bearish pattern happening in an uptrend. So, you know, we're going to look at all. You're going to be familiar eventually with all these combinations. Okay. Getting the actual, now when you get the course, what do you call it? The RSAI. The RSAI strategy is going to overlap on top of this. The RSAI course, okay, that will supercharge your trading to a higher level, to even a higher level. you're just basically going to have, you're just not going to ever, have a negative trade. I mean, it's just going to be almost impossible, just near impossible. But with this, you can do well enough. The percentages are 90% over. So, the percentages are pretty high. I would say we're very high. 90% is high. The RSAI just puts you into that 100%, strategy. So that's something that, you get into in addition. If you get the free, this is free. All of this is free that I'm teaching. But if you want to buy the RSAI strategy that's on top of this, and just, kill it. And then you'll be so good, you won't even need anything. You'll be able to just trade with a line. Then you'll need the RSAI strategy. But anyway, okay, so the bear lock, this is the bear lock pattern. So it's stuck, and then eventually, finally lets go, because you see how long it took to form this. It actually let go of being in that lock, and Forex was able to come down, fulfill it, and then once it's filled, it formed another one down here. So,
Connect One Forex Signal Services allows traders to take advantage of market trends to grow smaller accounts into larger accounts. No need to rush to capture a 50, 100, or 150 pip signal, because KOFXS signals are between 200 and 1200 pips. Here's how it works. When you look at the signal, it'll have an open price, a stop loss, and a target, with additional information about risk-return ratio, potential pips, and explainer video for the trade. If the trade gets stopped out, you can either wait for it to return to the open price, or you can take a second signal that's going to have an even greater return with the same target price. Our special strategy for calculating price targets is what separates us from other services out there. Take advantage of large trend movements and start on your way to success with KOFXS Group. For more details, visit our website or join our Telegram channel for a free trial.
if I were able to bring up an infinite number of strategies, you would see an infinite number of patterns all inside of this, okay? All right, and you have the bear retreat. I love these. I really love these. I love these. Oops, sorry. I love these because these are very, oh my gosh. I mean, I've made 300 pips. I made so many pips on these. So many pips. So many pips. So many pips. Yeah. It's a great thing. It's a great thing when you see these harmonics fail. It really is. It lets me know I've got big money coming. Okay. Look for 300 pips. Minimum 200 on up to 2,000 pips. I mean, it's really amazing. Wow. Okay, moving on. Have the hiccups. So here we have the bull misses the matador. This is a bullish pattern. And you see that it started to go up just a little bit. Came down because the downward trend is too strong. You don't necessarily want to trade against the trend. You notice this is in a downtrend, okay? There's a bullish pattern in a downtrend. You don't want to trade that. You always want to try to wait and see if it becomes this type of thing. Bull misses the matador. Then we have the consolidation at the bottom, and now it's beginning to head back up, okay? And you can make a lot of money on that. Bull horns lock. It's the same thing as the bear, just reversed. You see in consolidation here. It got stuck. It got free, but it headed higher. When these things are stuck, I suggest just play the open. That's all you can do is play the open. Or just have trades outside of the range waiting. You can do that. If you see it breach, I would say have a trade here. Get ready to catch this. But if it goes the other way and it breaches here, wait for the pullback. Wait for some of the patterns to say that they're, some bullish pattern to form here. So like a ABCD extension here. And then it start to head back or showing signs of the lower swing highs, the higher swing lows. And then you want to grab that and it'll take you all the way to the profit. Bull flips the matador. So here we have a bullish pattern, and the bull just literally just kills it and then some. You know, flips the matador and takes out the crowd, also the spectators. All right, so I'm gonna take a break. Well, this is gonna be actually the end of the free course. I want you guys to really know this well before you go into. I'm gonna fucking hit this before you go into the RSAI strategy that completes this my whole trading style. Okay, I want you to get the final piece of the puzzle. Okay, I want you to get the final piece of the puzzle. I want you to go all the way. I want you to be where a point where, you know, where you're teaching others. You know, I don't mind it. Teach others pattern. You know what I mean? Teachers, you know, eventually, I mean, that's what you want to do. I want to produce more teachers so that I move on. You know, you pass this down to others. Okay. You know, if you want to say, well, you know, if you want to take this, you can take this. You can, you know, you can make some money. You can do some trades. You know, okay, you can follow. You can do well. You can do very, very well. You're gonna have some drawdowns. You gotta watch. You know, have your stop losses, things like that. But if you really want to know when, where, how, you know, you want to know exactly on a precise level what's going on with the price. How to really break through your breaking your confidence. Be really confident. Those larger trades, making 15,000, 30,000 profit in one trade, then you're definitely going to need the final piece of the puzzle, and that's going to be the RSAI strategy course. Now, I don't know what it's going to be, but it's going to cost something. Because it's going to take me quite a while to put it all together. Still working on it. I hope to get it done in a month. So, yeah, so really excited. Congratulations for getting this far. And on top of that, when you get the course, you will get a mentorship with me for 1 year. And that should be enough for you. You'll be fine after that. I don't think something like that. It should be 1 year. I mean, I don't know. It depends on you know, what my manager says as far as you know, my sales manager. He says, okay, do this, do that. You know what I mean? I'll take some advice. If I say, yeah, okay, I'll do this. You know, I'm thinking 1 year. I mean, you know, maybe, I mean, it's kind of long for me, possibly, because I don't know. I don't know how many people I'm going to be juggling. If it just becomes too much, then I have to charge, because I can't, you know, I'm not an octopus with 8 arms, you know. So, you know, that's the problem. As I'm not an octopus, but I will do my best to help you as best I can with where I am within the program and everything, and where you are and all that stuff. I mean, I would have to sit down, talk to you about where you are, your experience, all that stuff. It's a lot of time. So, all right. So, I thank you for watching the course here, the YouTube course, or if I have this posted elsewhere, free. I thank you. And don't forget to go ahead and, you know, if you haven't yet already, you know, make sure you get into myfxbook.com. Let's see, myfx.com. Make sure you join the Telegram group, Facebook, because one of these things could be down and I have to post something elsewhere. Okay. So you want to make sure you're locked in with us. What's the other thing? YouTube channel. You're here. You should be watching the YouTube channel, but you know, make sure you're there. I'm there. Okay. Truth Seeker, or renamed Connect One. It might be renamed, but it should. I want to keep it as Truth Seeker, but yeah, I want to keep it as Truth Seeker, but yeah. Next, I'm gonna do a video, and I'm gonna do commenting on the FX book. I'm gonna read community's comments and give my reaction, what I think, or as an experienced trader, what I think about it. It's some good advice up there. It really is. The traders are doing really well, I think, in my opinion. All right, so that's it. That's all. God bless, all the good stuff. You know, Godspeed and best wishes, and rooting for you. Peace.